afternoon and welcome to Daily Stock Market Update. The DSCX extended its losing streak for the second consecutive day as it lost 12.9 points or 0.2%, settling at 6,347 points. Market turnover was BDT 6.62 billion, which is an increase of 1.19% compared to the previous trading day. BRAC Bank, Trust Bank, Citibank, Islami Bank Bangladesh, Exim Bank and Prime Bank from the banking sector, Walton, Beximco and Berger Paints from the industrial sector, and United Power, MGL Bangladesh and Disco from the fuel and power sector mainly dragged the market down today. In terms of sector-wise return, the telecom sector registered the highest gain of 1.51%, while the cement sector posted the second highest gain of 1.42%. On the other hand, the general insurance sector posted the highest loss of 0.91%. 3 paper and print companies, 2 industrial companies and 2 general insurance companies were among the top 20 losers today. Zahin Spinning, Robi and Eastern Cables registered the highest gain, while Progressive Life Insurance, Bangladesh Municipal Paper and Apex Footwear were the top losers. There was no disclosed price-sensitive information of these stocks. The trading volume of Meghna Insurance, Eastern Cables and Aman Cotton increased significantly today compared to the average trading volume of the last 3 months. There is no publicly disclosed material reason for the volume increase of these stocks. Today's top 2 news. Bangladesh Bank has spent USD 7.62 billion from its foreign exchange reserve in fiscal year 2022. compared to USD 7.7 billion in the previous year, so that the Bangladeshi taka does not weaken much against the US dollar. This dollar selling tendency had significantly reduced foreign exchange reserves to USD 41.9 billion as of 28th of June this year. In the last fiscal year, Bangladeshi currency declined by 9.2%, which is the highest depreciation against the dollar among its Asian peer countries. Global commodity prices picked up due to demand rebounding after the pandemic. Supply chain disruption caused by the Russia-Ukraine war and rise in international transportation cost. Meanwhile, higher import payment and lower remittance have reduced the country's foreign exchange reserve, and Bangladesh Bank had to intervene in the foreign exchange market. The remittance inflow for the fiscal year of 2022 registered a cut of 15% compared to the previous fiscal year. Bangladesh has received USD 21.03 billion during the fiscal year of 2022, which is below the expectation as remitters found informal channels more attractive. As the exchange rate gap between interbank forex market and curve market is widening, the remitters prefer the informal channels that provides them more benefits. But the higher migration of workforce during the first 11 months of the fiscal year will help Bangladesh accelerate the remittance inflows in the upcoming fiscal years. That's all for today. We'll be back again tomorrow with more updates on Dhaka Stock Exchange. Follow Alert Global on Facebook, LinkedIn, Twitter, and subscribe to our YouTube channel. Thank you.